All right, so welcome to another FOMO Friday. This is actually a very special FOMO Friday that we're doing with, as you can see, one, two, three, four, and Ross is on his way. Five of our other mentors. The topic is going to be on the whole tendency towards holding losers and even averaging down into that position, um, and just trying to get kind of multiple perspective on you know the tendency towards doing that. Is there ever a time when that's actually beneficial, and just the relationship with you know the the temptation to do that, and is it ever possible to make that actually work? So I do want to share a quote, but before I can do that, I need to do a screen share. So give me just a second. Um, let's see.
I think this one.
There we go. So this is a quote from Mark Douglas that I've actually shared a larger portion of this quote, but I just felt like it was relevant to the topic of conversation that we're about to have. And he shares in Trading in the Zone, there's a huge psychological gap between assuming you are a risk taker because you trade and fully accepting the risks inherent in each trade. When you fully accept the risks, it will have profound implications on your performance. The best traders can trade without the slightest bit of hesitation or conflict. I don't know about the slightest, but and just as freely and without hesitation or conflict, admit it isn't working. So, kind of with that said, I want to jump in to maybe hearing from some of you guys, I guess your own relationship with this idea of why we hold losers and why we even add to those positions, sort of the temptation of it, and at any point is it actually an advantageous thing to do? So yeah, anybody feel like jumping in?
So
But
maybe speaking to the when is it more strategy and when is it more emotion?
Right.
so let me. Hi, I'm Roberto, by the way. I'm educator here at Warrior, and I wanted to say just maybe to as an icebreaker that I guess there's a lot of emotions involved in this kind of pattern, and I think a lot of it is related to expectations. Whether that's an expectation of some sort of profit or not, of course, accepting loss, or even worse, not having planned the trade, in the first place, and that could be happening for many reasons. We know that it could be inexperience, but it could also be because of revenge trading or chasing or those kind of emotions. And typically, when that happens, averaging down, meaning not accepting to take loss, is when, of course, we experience the worst of our training, and whether we come out okay, and sometimes it can even happen that you average down and then you come out okay, maybe break even, or in the best case scenario, but it really becomes clear to realize that when you average down, you are setting up yourself for either break even, the best case scenario, or for a huge loss in the worst case scenario. And so that's never going to work. But that's like kind of like easy to realize when when you are actually in a place of mind where you're centered, where you're aligned, and where you are. But we all know, we all have been there, that it's not always been the case, especially as a beginner trader. I was guilty of that. It was one of my worst patterns. Was about averaging down way past the initial plan that I had, and I would say it was because of not wanting to accept the loss. Easy to say, but typically it would even start for kind of a whatever it's a stupid reason. Like I opened just a small trade, just because I want to reach that number, or I'm bored, staying here, and the next thing I know, it starts going against me, and I want to build a bigger position. And then, of course, we all know how it goes, right? Averaging down, meaning the opposite of what it could be as a plan of building a position. There's nothing wrong with having a plan of building a position if that's part of the initial plan, and then letting play out. But on the other hand, if the initial plan that you had was to have an entry and then a clear stop and a target, that's what we should always follow. But maybe it's just an icebreaker to see, like, I was guilty of that many times. Right now, it for me it was really then coming to a point where I had to figure out how to become more kind of strict in my discipline, meaning defining some set of rules that I needed to adhere to kind of like marry to before I could even take the trade. And that helped me a lot into at least definitely kind of avoiding these kind of situations from happening. But we're all humans, and it's not that easy, to always be impeccable, to always be great at executing our own plans. Maybe you guys can add a lot of things to this. That's for sure.
Yeah, thanks for that, Roberto. And I'm curious if that's what Roberto was describing. Is that something that at different times in your own journeys as traders, is that something that all of you struggled with, especially that kind of emotional, getting grabbed and just sucked into that temptation of holding those much longer than you should have, and even adding to them. Is that something that you think every trader goes through?
Do.
Yeah.
I think that's something everyone goes through. And I think to add to his point, it's also, you kind of get, I had at some point gotten really just glazed over at the loss. And like, oh my goodness, I have no idea what to do. I was in freeze response. I didn't even have the capability of making a decision at that point. I really needed a lifeline or a rescue, and that's what the chat is great for, but I didn't have the capacity to make the decision because it was so far beyond me. I just sat and watched it, continue to leak my account until it got so awful. And then you cut it and it goes right back up. Yeah.
That always feels great.
I'm curious about how it evolved for you as traders. How it evolved from the beginning that Roberto kind of talked about a lot to, as you became more experienced. How did it shift?
I had a thought about when I started trading last year, and I was on a cash account, small account value, and so I only had a certain amount of cash each day to play with, and it made me feel like I had to be right on a trade. And so I would take a trade, and maybe it wouldn't work out, so I would average down, and I'd be like, no, this is going to work. And then, of course, it didn't work. But I didn't feel like I could just get out and try another trade or something like that. And so now being over the PDT rule, being able to have instant settlement, when that happened, I felt like I had superpowers. I could just get out if it's not working. And I started trading in a small Roth account this year, and that's now a year and a half later, having some more experience, that's the way that I've been trading in it, and it's been going well. But like Jess says, and like we're talking about here, and with the quote that you showed on the previous slide there, you just have to have that discipline, recognize when it's going against you, have a stop. You just have to get out. Yeah, I think that's the main point.
That's a great point, Danny and Selena. I wanted to add the fact that I guess what helps the most into this, of course, it's easy to say, but it's self-awareness. That's really the most important, because it's, as I said, it's not something that is not easily recognizable. If you are there, if you're present, you know what's going on. But sometimes, of course, we get this foggy situation, we froze, and so it all kind of like ends up in a situation where the trade could get out of control, and we start like holding on losers or even adding to losing position for for no technical reason. And so self-awareness, I guess, is the most important. And I can take the example of today on my trading. I had a couple of trades. I started my day with a red trade, and I stopped out where I should, and it really hurts when, of course, you start your day with a loser. But I can tell you that this kind of trades, as it happened, it could have been one of the trades in the past where I actually averaged down and then stopped exactly at the top or against me, and then ruined and getting my day really out of control. Instead, I stopped out, right, and then there was another setup on the same name, and I took another trade, and went in my favor, and I ended up kind of being okay with the day. But my point is more about the fact that I was self-aware of the situation as it was, because it could have as easily gone the very worst case scenario. And instead, after that, I closed my trade, and then I recognized everything was choppy, and instead of trying to force anything else, once again, self-awareness. There's nothing moving. I better take a walk. I better do something else, but not stare at that, because sometimes one of my worst trade ever started out of boredom. I was just there, and I started building a position, huge position. Like, next thing I knew, I was like, I could have possibly built such a terrible trade. I could have possibly done so, and it started because of boredom. So if you're bored, take a walk, do something else. Nothing is moving, right?
So Ryan brings up a point that could be really emotionally activating. He says, it's hard to get out sometimes. No one is buying from you. And sometimes you're in a halt, or sometimes, which is most of the time, you don't want to because you're stubborn. So he brings up kind of all three different aspects of that. But I was thinking in that comment about the way that, not being able to get out for these other reasons can really trigger an emotional hijack.
Yeah, I had that a little bit on that trade I took. It was like 2 weeks ago. I can't remember the name of the stock, but it dropped from like $60 a share to like $12, and there was no news on it. It was just, it was crazy. And I tried to start doing a bounce trade after like the third halt going down or fourth halt going down, and it was kind of like a little bit of like boredom. Like, it wasn't a setup that I really trade that often, but I was like, I'll give it a shot. And I took a trade on it, and then it was a starter size, but almost immediately it tanked and was halting going down, and now I'm in the halt going down, and there's no chance to get out. And then it was showing a resumption like several dollars a share lower, and I knew I was going to be down like 10 grand, and I was like, oh man. Well, so I added to it. I was like, well, I do think it's going to bounce. I was just early, so I ended up adding to it, and then it halted down again, and I eventually cut the loss down like 25,000-30,000, and I was shocked that such a kind of a nonchalant initial like bounce trade with small size turned into such a big loss. It was a combination of, it wasn't really the best. I had a couple really good reversals on that setup of several halts down, and one of them was Norwegian Cruise Line Holdings last year, and it was fantastic. And I have had some good success with that setup, but the fact that I so quickly was caught in a halt down changed me from being able to just minimize it as a small loss to like, now I feel like I have to average down, because there's no way down $8 a share I'm going to get out break even without averaging down. Mm-hmm. And I guess that stubbornness of really not wanting to realize a like $30,000 loss, the only chance of minimizing it would have been doubling my position and then getting out halfway back up. And so in hindsight, that one never even really bounced. It just kept going lower. And when I averaged down, I said, this is now my new stop. And it did start to bounce a little bit, and I thought it was going to halt going back up, and I was like, finally. And then it immediately reversed and went right back down, and I was like, that's it, I'm done. And I cut it. So I lost a little bit for my average down, but usually if if I do that, I try to kind of set that as like, that's my new stop. And although unfortunately, if it had halted going down a third time, then all of a sudden I might not have been able to get out because of the volatility and the spreads on that stock. And then now I'm averaging down again. And so I had mentioned to Ted earlier this week that I think averaging down is something that I have done more in the last year than ever before in my trading. And I think that there are times where a dip trade is turned into buying a little bit more, a little bit lower, which is effectively averaging down. But in the context of something that was generally pretty strong, above the VWAP, strong momentum in a hot market, those ended up, when they reversed back up, ending up being great dip trades that went higher. But it takes a pretty high level of discipline to know when to, in fact, cut a trade that's flushing and stop averaging down. And I think that requires a pretty high level of intuition about what the market, is telling us. And there's also some instances where I bought like right into halts going down, thinking it was going to bounce off that level or it would bounce off the VWAP, and I got smoked on those trades. So I've noticed in the mentor sessions that I've posted a lot of questions about how do you do a dip trade? How do you know it's dipping and not flushing? And I have said, if you're not sure, you shouldn't try to trade that strategy, because it's the most recent strategy that I've learned in all my years of trading, which makes me feel that it is probably the most risky, requires the most intuition, and that's something that takes a lot of time to get. So I would avoid averaging down in any circumstance until you probably have at least 1 year of profitability, because I think more often it's throwing good money after bad.
Right.
It's going to make the loss bigger, and you don't have the experience to make that educated decision of, is this the time where it's the right move, or is this the time where I'm just going to triple my loss? But Danny and Selena, who are a bit newer, and Danny, you're a bit newer than Selena, I don't know to what extent you guys have been averaging down or have found that it's just like a do not do it.
Okay, so I plan for that.
Yeah, go ahead.
Thank you, Danny. I plan for, if I plan to average, and I've done that this week, and I had that conversation in the large caps, I started with the starter position, and this happens when I know that the range is really broad on the stock and the stock is volatile. So I can get in it, make some money. I want to be in this stock because in the recognizing of how I am and what my triggers are, one of my triggers is if I miss a move, it triggers me. I want to get that back, so I have to be really present with that. So I started with a starter size, and I had defined levels where I planned to add to the trade. But this is about my strategy. This is not about me panicking anymore, which it was, in the first years of trading, when I was just like glazed over. I could not do anything. I was, frozen by that, that stress response of seeing so much red and didn't know what to do, or just frozen and watching it go against me and still not making the action to stop that bleeding. So most of you who are familiar with my strategy, that I want a lot of time frames to be compatible. A lot of strength or a lot of weakness across the longer time frames. And given the duration of my small account challenge and just being able to take limited amounts of trades, I've learned that I can hold through some levels of damage when planned. And that is the biggest thing that I have to say to you. So in a 1 minute scenario, I may have started in a starter in a short position this week. I'll use that, and it spikes up. Well, it spikes up right into my area of resistance at the 60, and so I know I can add to my position there, and make the money on the way back down. But I think what I'm trying to say here is that it's the difference between seeing the bigger picture of the stock's strength or weakness, understanding that I have a plan to give it its opportunity to work itself out if my entry wasn't perfect. And sometimes that's starter size, and sometimes that's going, I'll just trade this with X amount of shares the whole time, but if I get into trouble, I always have some. And a lot of you know that I'm shorting a lot lately, and I can say this, for that same purpose of if I need to add to it, if my entry isn't perfect, we get a weird spike, which is opportunity in that case, I always have extra shares. Now, in a long position, I don't max out my buying power, but I always have the extra shares on a short position when I planned to be able to add at certain levels if it goes up to that.
And I generally do the same on dip trades. I usually hit my shift 1 or 2 hotkey when we get one of those flash, like 75-cent drops, knowing that it may go a little bit more because I'm buying like while it's still red on the tape, the way you'd be shorting when it's still green on the tape.
Yep.
But I mean, I never would go in something like that with like 25,000 shares, which would be basically a full-size position for me in most scenarios. I think the most I ever did was like maybe 3 orders of 5,000 shares, so 15,000, and that was on a day I was already like really cruising, had a big cushion. And so another thing I would note there is that in that scenario with dip trades, I always know I'm leaving myself room to add, and I have never taken a dip trade as my first trade of the day, as far as I'm aware, because it's something that I feel I need more of a cushion to trust that buying a sell-off. And also, I don't really do dip trades unless we've already seen something that's proven a lot of strength. So, although it's possible I would sit down and something had proven strength and I missed it, and the first trade would be a dip trade, it's just a little too risky for me. So I try to focus on, a long trade that I feel like, with one entry, one exit can give me a cushion on the day. And then for the small count strategy, that's my one trade of the day and I'm done. And I'm not taking any more trades. But Dan, Danny, what were you going to say?
I had a couple thoughts. Number one, mainly that averaging down is really dangerous, especially as a beginner, because it can sometimes reward you when the trade was a bad trade, and it can give you the wrong learnings, I guess. I think number one, if you don't understand what's happening and why, you should not be in the trade. Luckily, I didn't have too much issue with averaging down. I had a couple bad losses in the first couple of months, and it was enough for me to just not do it anymore. And maybe that's what has to happen. But eventually, you just don't want to have that happen anymore.
Did you have any that you turned into like an overnight hold? Because I had one of those, and that was it for me at the beginning because it was so upsetting.
No, I don't think I ever really held an average down overnight. I think that I generally was able to cut the loss and just deal with it. I think it's really important also to know your strategy. And if you're day trading, then day trade. If you're swing trading, then swing trade. And that's all part of it. But Gina made a comment a little bit earlier about work ethic and guilt of work ethic and over trading, and how, and I'm very similar to you, Gina. I have a lot of work ethic that makes me want to be working. And so I'm on Pacific time. Sometimes I'm done with my day by 7 a.m. And it has been kind of interesting navigating that. I actually mentioned it to one of my friends who gave me a good piece of advice, and what he said was, don't feel guilt about not living someone else's life. It's your job to take good trades and to not take bad trades. So
it's great advice.
Just a thought.
It's really interesting.
Well, a question that I've had is, and especially, having all of you here with us, differences between like small cap, large cap, swing trades, options, are there strategies across that spectrum that treat this very differently? I think, Selena, you were, talking about some of those starter positions and even, times when you would add. Can anybody else speak to that of, especially like in something like swing trades, when you're looking at these much larger time frames, how does that factor into what you're willing to risk?
Yeah, I could kind of weigh in here on this. So Ross said something that's really important. The experience factor is a big one. I definitely would say that averaging down is, you see it a lot with people who are new and beginning, and they don't want to take a loss, and they don't have the experience really to even understand the concept of averaging down, and they just do it out of fear, and it's sort of like a instinctual thing that I think happens to try to save yourself from that fear, the what ultimately happens, the loss.
The pain of the loss. Yeah,
Yeah,
the loss
exactly.
isn't real until you press that sell button. So there's
Exactly.
always hope that
Yeah.
that'll turn around on you until you finally hit max loss or you get a margin call.
Right.
Right. But what I will say is that as a lot of you guys have seen or know, I predominantly my swing trades are all buying stuff into weakness. Right. It's buying stuff that is broken. It doesn't look pretty. It's really at points where no one wants it. And we talked about this yesterday extensively in the mentor session about kind of the emotional cycles of the market. And we talked about how that fits in and why this strategy approach works this way. And you can see that during these cycles or these phases of market emotion, how the buying weakness approach couples with what happens. And it's pretty simple. You've got the cycles that basically as the market moves up, you've got kind of thrill and excitement. You get to where it gets really up and away and lofty, and there's kind of a euphoric type of feeling. Then it starts to pull back a little bit, and it's not really making a new high, and maybe some anxiety and fear, denial start to set in, and then then you get a little bit of desperation and then complete panic, and that's when everyone starts to feel like, all right, I'm giving up, I'm gotta just get out, and I can't take any more pain. And how many times has someone been in a trade where you're at that point, you get out of it, and immediately it turns back around, right?
Right.
And that's the point where you start to get the turnaround, and then you've got that sort of feeling of hopefulness and relief in a sense, and the market starts to move back up. And for any of you that didn't see or didn't attend the mentor session yesterday, go watch the recording. I go into a lot more detail and get a lot of visual examples of how and why this works. But really, the main thing about it is that when there are two totally different things: buying weakness and averaging down. Averaging down is done out of an unplanned scenario when, again, you're trying to avoid the inevitable. Buying into weakness is a very specific, very planned approach, and that includes at where you're going to buy it, and that includes the sizes you're going to buy it. And I understand that it's a very difficult thing to do, to buy as something is going against you. All right, it's completely counterintuitive. Now you add in the fact that you want to add more, right? You want to look like a pyramid on the way down. You want to add more as it's moving lower into your planned levels. So that throws a whole nother completely counterintuitive factor into it. So it requires an extremely specific plan that you have to be willing to follow and execute on it. If you don't, then the buying weakness strategy is not going to be productive for you. But what you have to understand again is it's a very specific plan, and it has to do a lot about with the sizing that takes place. And those two things are the main factors of what you want to do when you're buying into weakness. And you don't want to just sit with a trade because it's going lower, or buy just because it's going lower. Not buy to buy. You have to have levels to trade against, and that's really important. And any of you guys have kind of seen how we do this. you see how it works out if you're executing properly. You can trade a stock that is essentially crashing and do really well. It's the same thing that Ross does on a fast time frame, right? He's doing it intraday in a matter of seconds, but it's the same approach. He's making money as a stock is crashing because he's got a very plan-specific approach. Now you just expound that out into a different time frame, and that's what we're doing with the buying weakness approach. So if you're trying to identify or separate the two, that's kind of what you've got to understand. And also, I'll say that understanding those market cycles, those emotional market cycles, is really important. Because I'll tell you that I can even see it come through in some of the chat rooms. Right, everyone is getting sort of tired and at a point where they just they want to walk away from the market. They're getting tired. They want to take a break. They're going to sell all their positions. I can see it come through, and it's a situation that tells you that we're at a certain point of this market emotional cycle, and it's telling to what's about to happen.
Yeah, it's one of the things, this distinction between, traders have been around long enough that they've seen sort of, multiple phases in the market. Mm-hmm. And when you're a beginning trader, what you're looking at, what you're learning, it's hard to hold that concept of this is just one snapshot of the market in time. And so they may start to develop a strategy that works for them right now, but then the market shifts and all of a sudden, it's a completely different ball game. And so for what a lot of y'all are talking about is, some of these strategies can work really well, just like what Mike was saying, but, to have that cautious that if you're going to contemplate doing some of that, you need to have been around for a while.
Right. From the beginning of the conversation, something I've been thinking about is the competency hierarchy. So as you go from unconsciously incompetent through the conscious levels and come to a more intuitive level. And when Ross was talking, he mentioned that word intuitive a few times, that when you've gotten to that point of having enough experience, and like Ted was pointing out, when you've been through enough cycles in the market, then you've really developed that. I think about and learning the way that we don't just go in a linear way. It spirals around. We touch into it. Each time we touch into it, we're bringing all of the knowledge that we've gained up to that point. It allows us to see things from different perspectives, from multiple dimensions, and that intuitive awareness really begins to grow, especially in trading with, the experience of having consequences like losses and having, payoffs too, that even roots some of that learning a little bit deeper, because there is such an emotional piece to it. But as all of you were talking, one of the things I've been really struck by is the way that, your understanding of this, the knowledge that you all have, really shines through. And, I was struck when Selena was talking about, the way that she was able to kind of explain, the differences between, getting in, more emotionally in the beginning, and then how that began to grow for her. And even as Mike was talking, even like it's almost as each of you are talking, I can feel those years of experience, right?
Right.
Like it's like, wow, a more expanded knowledge. And I think that's something that all of you have talked about is be really careful with this as a beginning trader, that you might only have that one snapshot right now or a few snapshots. But the patience of really learning this will have an impact. And, and hopefully you don't get a payoff that pays off in the beginning just out of luck, that roots you into thinking that's going to come around again and again.
Yeah, that's that negative, that reinforcement of a negative behavior is a real problem in trading. And Mike's strategy on the long term, I think for a lot of people it's like, how does he find these stocks, and how does he know to start buying it here? Certainly he's got a system of how he finds stocks to trade, and then he uses levels very similar to the way I would, which is technical. I use intraday, he's using more daily. So from an intraday place, it's like, okay, these are spots I would start thinking about doing dips and things like that. But there's no question that there are components of trading and some of the more advanced levels where you'll see me getting in and out really quickly, buying these dips, selling as it pops, buying the next dip, selling as it pops. That requires just a lot of experience and the ability to know, are we in a hot market right now, or what's the hot sector right now? That requires this sort of little internal library of stocks and how the market's been performing that you only acquire through a period of practicing, which is one of the biggest reasons to start in a simulator, not just because you're more likely to lose money when you're a beginner trader, but also because when you start on day one, even if I went away on vacation for like 3 months and came back, I would be so disconnected from the current cycle of the market. What stocks are hot? What's been hot? What's been moving? I mean, right now, I can always look back and I can think about recent IPO breakouts, recent IPOs on the IPO day. I can think about reverse splits. I can think about what's been hot in these last few weeks. And then when I see something, I can then apply that sort of built up knowledge. And so every day it's kind of paying off this little dividend of helping inform my decision. And you don't gain that knowledge without first having spent some time in the market, but then it also requires spending some time in the market and being able to understand what information is important for me to retain because it'll inform future decisions and what's something that's like irrelevant. And so that's, experience.
Right.
I mean, there's no way around it. It's just, that's the experience component that a beginner trader sitting down on day one might average down for all the wrong reasons. Not because it's a stock hitting a critical level like a VWAP or whatever, just because they're just averaging down. And maybe it's successful, and then what do they learn? That I guess doing that works.
Until it doesn't.
Right.
And give a very practical tip for our beginner traders out there. I guess what we've been talking about it's really a low spectrum, and most of it is really advanced, right? What Selena talked about, what Mike talked about, what Ross talked about when it comes to building an entry, basically, you can see it as average it down, or you can see it as building a position. That's what Selena's been talking about. That's what Mike's talking about. And my 2 cents for a practical tip I would have given myself as a beginner trader, once again, is, first time and first year of the career, first few months until you prove profitability, I would say at least for 6 straight months, is this: 1 in, 1 out. You just plan your trade, as easy as that.
Yeah.
You have one entry point, whether it's at a dip, whether it's at a breakout, whether it's that wherever you want it to be. In my view, it has to be 1 in, 1 out. So that way, you also stay away from reinforcing a bad habit. Even when that kind of behavior may work and may save you from a loss, it won't save you from the huge loss. You may put yourself in a situation where you put your entire career, at a risk in one single trade.
Right.
It's really what we're talking about. So we talked about how important it is to gain experience. So what's gaining experience? It's watching time of the market, seeing the time, the market kind of like unfolding, in front of our eyes, and so that you can find, and we can find our own niche of success. So in order to do that, my 2 cents would be just 1 in, 1 out. Make it very simple. You won't get results of tripling your account in 1 month, and that's okay, because the first stage is really just survival. And then as soon as you get into more of this understanding, and you get enough experience proven and sustained by your own result, then you're climbing up that pyramid that Diana was talking about. In more conscious competence, that will become unconscious competence at some point. And then, of course, at that point, you will be able to kind of unleash and liberate, the power of your own experience. But you just cannot, try to go too fast too far too quickly. You know, it's a
Right.
recipe for disaster.
So I have a question on that. So, the small account challenge that I've been doing right now, my first day on it was like, I just traded like a regular account. It took like 20 trades. And I felt like that was a big miss, like a big fail. Like it was like, this is not the right way to trade a small account. So I kind of pressed the reset button, and day 2, I was like, I could just do one trade, one entry, one exit. And maybe there might be times where I would do 2 entries, or maybe 2 scale outs, 2 exits. But generally, one entry, one exit. It's also easier kind of on hotkeys. One buy button, one sell button. Mark it in, mark it out, whether it's like ask +10 and then bid -10. But what's your thought on taking that one trade a day? I mean, clearly, first, before you even take one trade a day with real money, you need a period of trading in the simulator. And in the simulator, it makes sense to trade a lot because you're gaining more experience, more time in the seats, more experience. So then when you flip the switch and you say, I'm going to trade with real money, you take one trade a day, then do you trade in the sim for the rest of the day? Do you try to keep gaining that experience? Or, some people might then feel that temptation to go back with real money, or they make more in the sim than their FOMO. And Danny, I notice you trade quite a lot. I would say sometimes it seems like almost over trading because you trade later in the day. You're in California, so it's 12 o'clock here, but it's only 9 a.m. there. Still nothing to do. So, at what point because you definitely don't have a one trade a day strategy right now. You're definitely much more active, and you're a bit further along than someone who's on their first month. But what's your kind of thought? I don't know, anyone who wants to comment on one trade and then sim, is that a good idea? Roberto, yes, you'd say so, and then Danny, your thoughts?
I would say probably in the first few months, I don't know about just one trade, definitely one in, one out, but a defined amount of trade at most, like 3 trades of a day at most,
okay.
could be a good way to go.
Okay.
Go ahead.
I'm definitely on the more active side, and Ross, like you mentioned, I'm on Pacific time, so it's early morning here. When you're wrapping up at 10:30,
7 a.m.
it's 7 a.m. What I have noticed, though, I was on the East Coast visiting family a couple of weeks ago for a couple of weeks, and it was really nice to be getting up a little bit pre-market, and then like you feel like it's already 10:30. You want to be getting up and doing other stuff. So now that I'm back on Pacific time, I've been getting up earlier. I've been on the market by about 6 a.m. and trying to get a little pre-market trading in and trying to just wrap up quickly. One of the major issues, which I talked about in my session the other day, was I recently realized that so many of the days that I would start out well, be up like 1,000, sometimes more, and ended red, would have been so avoidable. Time of day, just over trading, the volume drops off and things become less predictable. Offerings happen midday. There's so much that could possibly happen that usually doesn't happen in the first 30 minutes, hour of the market or so. And so I think that I've noticed that I've been a lot more successful recently, just trying not to trade so much and hit a couple of good trades, and it keeps you in so much better of an emotional state. You start taking a couple red trades and you want to get back to green, and this happened to me on Tuesday maybe. I started out a little bit red, and it just took all day to get back to like +10 on the day, and it just wasn't worth it. I should have just stopped when I was down 100 or 2. It's just about the long game, maintaining emotional composure, having kind of a longevity mindset, and I think that time in the sim and chart time and seeing those patterns goes a long way when you're starting. But when you're trading with some share size that can get you in trouble sometimes, you really need to start pulling it back in.
Mm-hmm. Well, yeah, on that kind of note, sometimes someone asked if we were going to talk about impulsivity and stuff during this way, and I think we will, but something that I sometimes find is that It's that last trade. It's that trade, and Jess kept making fun of me. It's like, oh, here comes Ross coming in for the 10 a.m. flush. I'm all of a sudden 10 a.m. with my second biggest position of the day, 30,000 shares or something stupid like that. And there's a 50-cent flush, and just like that, I gave back 30% of my profit. I go from up 50 to up 35,000. And, I'm not saying 35,000 is not good, but after you were just up 50, there's that urge to get it back. Mm-hmm. And then I go back in for one more, and then I'm up only 25. And then all of a sudden, now I'm back more than half my day. I should stop, and now I'm starting to fight and scramble and grasp at straws. And now I'm also very aware of the fact that I've got a limited period of time. We're coming to the end of the morning. Unless I'm for real going to trade all afternoon and hope for the off chance that we get some afternoon momentum, which, we get it now and then, but more often than not, we don't. All of a sudden, I've just kind of ruined my day. Mm-hmm. And it can be hard to keep the presence of mind to, throttle down a little bit and slow down. When you're starting to get further in the day, I can just lose sense of what time it is sometimes because I'm so in the zone of the stock. And then next thing you know, now I've got this hole, and the question is, do I cut it right here, or do I try to fight back? And it's a tricky one.
And that makes me think of both the influence of things like desperation, like just what you were talking about. It's like, things going well, all of a sudden something turns against you, desperation kicks in. And then that starts to influence every decision. You can just X that out.
I was going to log in on my phone.
Oh, okay.
I got to go check the bus because I think it's going to rain.
Okay. Starts to influence, every decision that you make, but then also fatigue. Oh, that, if you're sticking around and you're trading, throughout the day, being aware of, fatigue is a factor. So even if the things are going well, you start to get worn down, and all of that starts to influence the decisions that you make. And that's where, those unforeseen, emotional influences can really just start to creep in just for a matter of getting tired.
Right. There's distractibility. Your focus isn't going to be as sharp over a long period of time. And just as it's not as sharp in looking at the trades, you also don't have as much capacity with your own emotions to be as disciplined as you would over a shorter period of time.
Right. Which goes back to, I think, what Roberta was saying, as a beginning trader, even potentially having, setting that rule or expectation for yourself, one trade, one entry, one exit, and then slowly building from that so that you're actually, just as with any endeavor, building up your capacity of tolerance for the activity itself.
I also want to comment on what Danny said, because I thought that was really wise about, the difference between in the sim, because in the sim, you do have the opportunity in the beginning to learn a lot, to trade a lot, to learn a lot. And I know that the idea is always, trade in the way in the sim that you're going to trade in the live account, but it's also your learning opportunity. It's your opportunity maybe to juggle multiple trades. It's your opportunity to, have some of that experience. And if you're able to be in a live account and, just take the one trade or the three trades or whatever it is that, that you've decided on for yourself, you're building that discipline. Mm-hmm. Now, if you notice that you're not able to do that, and that, or balance, between, some people do go back into the sim and practice to have, more experience with new things. But then if that is taking you right back into your live account and you don't have that discipline, if it's throwing you off, that's something to pay attention to in yourself. Every person is going to be different with this. We all fall along, a different, spot along the spectrum of, falling more into an addictive behavior or impulsivity.
Right. So I'm curious, do we want to open it up for some questions coming from the room here? Are we ready to kind of switch into that, to have the students throw some questions at us? In fact, there's one right there from Jeremy.
Will you turn on the fan over there?
Okay.
It's getting really hot in this room.
It looks like we have one student joining from a bus here.
Yeah.
Thank you.
I can't see the question yet if it was for me.
Any thoughts on making a point to continue watching after making the decision to stop trading for the day to build up resistance to FOMO? I've been doing this after my sim practice, and it keeps getting easier to watch things run without me.
Okay. I mean, so I think it comes down, in my opinion, to knowing yourself a little bit. And I know that that's a weak point for me. And there might be times where I'm better suited to try to have that fight and build that strength. And there are other times where, for whatever reason, I just know that I'm just too vulnerable to falling into that trap. I just have to know to get out of the market. So that's me personally. I'm curious what others feel.
And then, let's see, it took me 6 months to realize that FOMO was not a big overall feeling, but a very small, subtle, ever-present moment. Please comment. That's kind of an interesting one for me, is that to be able to recognize, there's, in the emotional spectrum, there may be like these giant moments of FOMO where it's really easy to recognize because it looks so big. But, on a more subtle level, how much of that is just simply present with you? And that's a place of really turning towards and being, because Diane and I talk about these different parts of us. That's a really good part to recognize. The part of you that just carries FOMO almost all the time.
It's always under the surface, and then paying attention to what brings it into that space, taking up more space.
Right. And can you all see the questions as well? So if anybody wants to grab one.
Yeah,
and
there was one from Larissa to me that say, but do you think that the one entry, one exit aspect of trading helped you turn the corner to success? Did you take more than one trade a day? Yes, I don't want to make confusion about the one entry, one exit, meaning that I had a rule of taking just one trade a day. I never had such rule. But definitely in the beginning of my career, I would force myself. And it's a rule that I removed over time, but I would force myself at a maximum of three trades a day. Because, one entry, one exit would help you avoiding the averaging down by definition, because you cannot add to your position. So it's helping you there. On the other hand, the number of trade, I guess, would help you more avoiding revenge and FOMO kind of trading. It's like there's only a certain amount of damage you can do, at most, following these rules. So I would say yes, those two rules that I then over time kind of got past to, helped me turn the corner in my career. Definitely.
Rita asked an interesting question about switching careers to trading and how did you overcome the fear that I thought I could address, because trading is one of my main focuses. It is about tied or maybe my biggest source of income at this point, but I do consulting work for a logistics supply chain company. I'm a swim coach, I'm a photographer. So I have a lot of other things going on so that I don't necessarily only need to rely on trading. I would like it to be a larger and growing portion of my income, but I think that especially if you're just learning, if you are having to just rely on income from trading, that can be really tough.
Right, and I think for many people, when you're in those places of transition, of especially trying to move out of one career into a career of trading, impatience can become a really big factor.
There's a lot of that internal criticism. I should be there by now. I should have figured it out by now. I shouldn't be still making this mistake over again.
Or I don't have the time to be cautious. I've got to make this work like right now. And that usually just leads to, bigger losses and big setbacks.
or even the subconscious belief around, it all hangs on this trade. You wouldn't think that the next day, but the day that you're in it, there's that push of, prove yourself right now.
Right. And then there was one question that I can't. It was Patricia. I can't pronounce his name. Sounds like Patrick, but it's Eo at the end. Patricio, thank you. That was about recovering from when you've made these mistakes, like when you've done the averaging down and it's cost you a lot. And Ross, I remember earlier in your career, and even at different times more recently, that idea of going into trader rehab. When you've made a big mistake and you're sitting with a lot of fear of, will you just do the same thing over again? And those times of being, okay, going back to the fundamentals, setting tighter rules, setting tighter stops, at times, smaller position size, all of that, until you can kind of slowly begin to build up that confidence again. Because when you take these hits, it's painful. And that can be just sitting like right over your shoulder, okay, you're going to make more mistakes. You're going to make more mistakes. And you need some of those, consistent wins to get that feeling of, okay, you got your game back.
I would say that not sometimes, but every time, lowering your share size after that is really important. Because another day of a big loss or a smaller loss, but still a loss, a couple of hundred versus a couple of thousand, it just becomes demoralizing. I mean, it's really, really saddening. So a smaller share size, you can go, okay, that wasn't the right trade. Let me review this and find out about it. And you've lost a handful of dollars. And I've told students who have said, they're just not pulling the trigger. They see it, they can call it, they're not getting in it. Take yourself a 1 to 5, it doesn't matter, just a very, very minor, small share size of confidence in yourself to be able to do this. It's a confident share size, 1 share. I mean, I know that the commissions on that is sometimes difficult, but the loss is more difficult for your long-term career to keep taking a big loss over and over. So I'd say the first thing you want to do, Patricio, is, trust yourself. Acknowledge that you're new at this, and this is tough to learn, but it's worth it over time. And just start again with just 1 share, if that's all you can take. But learn on that and give yourself a little bit of a break. This is not easy, but
That's a really good point. I was watching one of Hulk's mentor sessions recently, and he was talking about he went down to 1 share or so for like a couple of months, just to make sure he knew what he was doing and kind of get back to it.
And one of the things, when you set these rules in place, when you say, okay, for this period of time, I'm going to be doing it this way. So often when we talk to people, there's this thought that will creep in of, if I keep limiting myself in this way, I'm never going to get anywhere. And so they kind of, cut that discipline short because they can't imagine, projecting that into the future. But reminding yourself, okay, this is for a brief period of time. For this 1 week, I'm going to, set these limits on myself just to get myself back, on firm ground. And then the following week, expand that a little bit. We have such a tendency to go, to think that, going from like 0 to 100. So, when I increase my share size, instead of increasing by say 100 shares, well, I'm going to increase by 1,000 shares. That kind of mentality. But if you can take step by step, grow that, keeping the discipline with you, and start to expand the parameters of what you're capable of doing. Your future trader is going to thank you for the discipline you have today.
So Patricio says, good stuff. Thank you guys. I reduced my share size and set lighter rules, and I'm accepting the idea of going. It's going to take time to accept it, but this is all helpful. Gabriel asks, this may be a terrible question. It's always fun when somebody starts with that. But in general, is it easier to manage risk on a small cap or large cap stock, knowing that both markets have different components to them? What do y'all think?
It is easier to manage risk when you have a strategy and a plan. It does not matter if it's small or large caps.
Thanks.
Yeah, perfect. Absolutely.
Yeah,
So
I would agree.
when you were talking about sizing, so there's one thing, very practical again, that I shared in the past, and I guess maybe it's worth resharing. It's about taking this approach, incremental approach of sizing up over time. There's kind of one method that I used in the past, and it was called like 8% for 8 weeks, meaning that I was kind of having a starting point with a defined risk that I had to take maximum. It could be being like $5-10 trade, whatever, and then at the end of each week, I would just honestly review my trade, right? And my trade, meaning I'm reviewing and kind of rewarding for the weeks that when I respected the rules, right? When I did not go into over trading, did no revenge, no average down. So I respected the rules, and as a reward for that, I would be able to increase my share size by 8% next.
That's smart.
So
That's really smart, yeah.
It's a way that it doesn't seem much, 8% of risk increase, or week over week, but if you think about that, in about 2 months you will be able to double your risk. If you always kind of like stay in track. So it could be easier because you don't have to kind of sustain that burden of kind of doubling your share size overnight, or your risk overnight, which is always kind of it could be too much to handle, especially as a beginner trader.
And it's a really good way of putting the focus back on the process, and really, that giving that as a reward is such a good reward, because I've had that conversation with people before of what is a reward for following your rules that would mean something to you, and that's really something meaningful.
And it's shifting the rewarding part from being green, which is really the result of a process more in the long run,
Right.
From this to actually, have I done my job good, meaning have I followed the rules, right? Or was I disciplined, was I courageous, was I patient? It's like that's what you want to reward. You don't want to reward P&L, because if you start rewarding just P&L, that's when you start averaging down for no reason, because you don't want to accept the loss. You're just detaching from the process, as you said.
Right. It's a beautiful way to foster growth. Go ahead, Selena.
You have no seed from the fruit of the process. And if you are focused on the process, it's like eating a peach, right? The money on the outside of the peach is really yummy, but the only thing that continues to feed you is the seed on the inside. So try and focus on the seed, which is the process, which is the discipline. Focus on the seed, and the fruit will grow, and you'll have a whole tree of it, and you get to eat all you want. I know this isn't a weird analogy, but
well, you're from Georgia, right?
Yeah. So this question from Alex, I'm really curious of y'all's take on this. This one just you'll see why it jumped out to me. Alex said, when starting your trading journey, how much time did you spend learning psychology versus trading strategies? If you could go back, would you have spent more time on one versus the other? Do you now think one is more important?
Well, I guess I can speak for all of us. Way too little. I spent way too little time understanding the psychology part of behind trading, and I guess it's at least as important as the technical part, as the strategy part. But the thing is that over time it becomes even more important because of how little importance we gave it to it, in the first place. And that's totally understandable. We kind of all know that's gonna be psychologically tough, but at the same time we kind of think we are the exception to the rule, right? Each one of us. It's like, oh, I'm not gonna go through that, I'm fine, and then next thing you know, you're averaging down, and next thing you know, you're chasing.
I don't think we do all know. I'm sorry, but when I came into trading, I had no idea this was going to be some of the most deep therapy of my life. It is definitely returning to me everything that was hidden in my behavior outside in the real life. The lack of discipline. You can let that slide a little bit in life, but you cannot in trading. The fear of missing out, the frustration, the revenge trading. And Danny Arm had a question earlier. Can you speak about revenge trading? Well, that is a lot of what we start doing with averaging down. There's no way I'm going to take this loss. I'm going to get that back. That could be one of the most vicious emotions to bring to your trading, into your trading career. And as soon as you notice that you feel that anger, that frustration, you need to shut it down and walk away, because that is, the revenge trading is often the account killer. So it all is kind of tangled up, but I never would have guessed the amount of personal and mental, emotional balance required to be a trader. But I sure am grateful about it, because it makes you a better person. And I've said that all along. Successful day traders just end up being, really great, emotionally balanced people outside of trading.
Yeah, I would definitely agree with that. I think that, of course, you need to know strategies and the technicals and what you're looking for to be able to take the trade. But past that, and once you have enough chart time, enough basic experience, I think it's almost all psychology. I was listening to a podcast, and one of the really good quotes that was in it, looking at it now, we all bring a different set of tools mentally, emotionally, physically to the table. We're all messed up in our own ways. We all have our own demons, addictions, dysfunctions that we bring to the table. And you need to figure out how to deal with that for yourself in a way that you can be successful. Just like Selena, I feel like trading is, it's basically therapy. You've got to figure out what you're afraid of, what makes you tick, and that's individual for every person.
Yeah.
And I really feel like my trading results often bleed over to my whole life. And so frequently when students tell me that they have something going on, I'm like, if you don't have discipline, you can't just come to trade and develop discipline for a few hours a day. Find some place off of the desk to develop discipline and bring that. It's a whole life thing, trading is. And I would say that if you don't have focus, I picked up archery. When I started losing focus a little bit, I picked up archery. And it really, I had a full green streak of a month, by doing archery, because it forced my focus on a single thing. I have to watch that arrow all the way to the bag in order for it to hit the target. So find ways outside of your life in order to improve your trading. It's a win-win.
That's a good point. So we all underestimated, I guess, how important it was. And just to finish it up, if you allow me to.
Sure, go ahead.
That's a question related to this from Other Bad that I like, because it's related also to what Selena's just said. How can you best handle a red day so you don't ponder about it all day? So I think on one hand, I think there is no way. It's like, it's normal, I would say. Like when you had a bad trading day, just like Selena said, like what you do in life, you can also bring into trading. And it's also true the opposite. When you're doing trading, it's kind of affecting, your own life outside of trading. But what I could say to Wouter and to all the, the guys that are here listening, is that you always have to remember that what you do in trading does not define you as a human in any possible way. So beating yourself up because you just had a red day and you didn't respect the rules, you averaged down, everything that you couldn't possibly have done into trading that you realize was wrong, is not a good reason to beat yourself up, and it doesn't define you and who you are outside of the trading. So it's I guess as sooner you realize that, the sooner it's a little bit easier to kind of ponder with these red days that inevitably sometimes happen.
And we often say take it as data, right? See what you can learn from it. That's true even on the emotional side of things. That when that happens and you notice yourself beating yourself up, really turning to yourself with compassion and recognizing there's a part of you that's really carrying this burden, listening to what some of those messages are, listening to just the internal dialogue that you're having, and and having more awareness of it, maybe even more aware of what did this day, what did this trade mean, what was the deeper meaning for you, what's attached to that, and then maybe being able to set it aside and engage in something that you truly love, spending time with people that you love, doing something that you love doing, or maybe just your regular life is something you love doing. Mm-hmm. So engaging in that.
So I think we're going to go ahead and we're going to switch gears since this is a 2-hour session. We're actually going to go ahead and drop into doing some meditation, which we've always included in our sessions. Yeah. So we're going to go ahead and drop into that.
And you're going to lead.
And sure, I'm going to lead it. Okay, I'm leading it. And so when we come out of the meditation, we're going to invite students to come on with us, and we can do some work directly with whatever this session in particular may be bringing up for you. So for the mentors, for one, I really want to thank you all for coming on and spending this time with us. This has been an incredibly, just rich conversation.
So much knowledge.
Yes, so much knowledge here. It's incredible. So for any of you that want to stay with us to work with some students, you can do that. If you want to do the meditation with us, and then if you have other things to do in your day, y'all can do that as well. But thank y'all so much for coming and hanging out. And so with that said, we're going to go ahead and drop into some meditation. So
sounds good.
Okay. I'm going to do the screen share real quick. I have another quote here.
I'll read this one.
Okay, let me move this down.
Deepak Chopra said, when you begin to meditate on a regular basis, you will start to notice that thoughts and feelings that may have been building up inside of you are gently released, and you reach the quiet place that was always there, waiting for you, the place of pure awareness. It is there that you will experience peace, healing, and true rejuvenation. Ted's going to take us there.
There you go. So, all right. Gotta have to switch gears in my own brain here. So yeah, sit back and you can close your eyes or have them open with that soft gaze. And just let yourself begin to breathe. Just allowing everything to start slowing down inside of you. Stepping back a little bit from all this activity we've been engaged in. And just taking a little bit of time to notice the breath. Each breath allowing yourself to become increasingly present. Just right here in your body, here in this moment, simply breathing. Just noticing and more fully experiencing all these subtle sensations of the breath. The feeling of air moving through you, that expansion and contraction in your chest and belly. Just allowing your awareness to move throughout your body. Noticing how your body interacts with the breath. And as you breathe in this way, you can begin to notice any place in your body that might be holding stress or tension. And with the inhale, Just breathing awareness into those spaces. And with the exhale, just encouraging those places to relax and let go to whatever degree they can. Letting that stress or tension begin to flow out of you with the exhale of your breath. You might begin to notice a little more space, a little more ease. And from this quieter place within you, you can begin to really step back and turn towards yourself. And just meeting yourself exactly as you are in this moment. But with some kindness, some warmth, compassion and acceptance. Noticing what it's like to offer that to yourself, as well as what it's like to receive it. Each breath moving into a deepening sense of connection with yourself. And just allowing that sense of connection to come into just the space of your heart, so that it might stay with you through the rest of the day. And slowly coming back towards surface awareness. Taking 2 or 3 more breaths. And when you're ready, you can open your eyes. Hey, welcome back. So, I think I'm going to go ahead and we're going to invite some people to come on with us. Y'all are welcome, everyone. It's good to just slow down in that way. And just as a reminder, the reason that we include the meditation in all these sessions, it's such a valuable tool for meeting those emotions that can come on so quickly. Just as in the quote that Diane was sharing, the time we spend slowing down in that way, begins to release, the tense way we hold all of those emotions. And with trading, it's, it can be so quick to hijack us. Anything that kind of allows us to reset, get grounded, get centered, and, either continue in that process of trading from there or make that decision, okay, hey, it's time to leave for the day. So, all right. I'm going to share, this is the link to come into the session with us. And so we'll take people on one at a time. And when you do come on, make sure that you mute the chat room so that we don't get that echo effect. And so, yeah, well, there we go. There's Craig. Hey, Craig.
Hey, Craig. Oh, you know what? He's on to be here. Forgot this is the automatic setting for me.
So you've got the whole team here with you. So any questions you'd like to throw at any of us, feel free.
Yeah. So I finally found my strategy. As you know, Ted, I was kind of struggling for quite a bit of time, and I want to say a few weeks ago I found like a perfect strategy, kind of like Ross, very similar to what you do. I'm trying to focus on short, quick breakouts. Flat top breakouts ended up being my best, but it's funny that we're covering this today because I was green for almost an entire month, and today was like the first day where I experienced like a revenge trading day in over a month, where it used to be very, very frequent for me. And it kind of like crushed me today because I was doing so well, and I'm still green on the month, but it's kind of a hard thing for me to mentally process right now, considering I was in such a long stream of doing well, and I gave back like half of what I did throughout the month. And I just kind of wanted to see how you guys overcame those really bad days when honestly I didn't follow my trading plan, I didn't follow anything, and how do I process that, especially on a Friday, when it's like a lot to take in.
Yeah. Well, I'll speak from my experience. What's interesting is that Friday is one of the most common days for me to have a big loss. And it's because, and to fall into that revenge trading, it's because I know how psychologically important it feels to finish the week on a clean trade. And so the emotional stakes feel higher to try to get back some of that loss. On a Monday or Tuesday, the emotional stakes aren't as high because I have the rest of the week to try to recoup it. Going into the weekend, I always want to go into the weekend feeling good. And so I think it's probably not a coincidence that this happened on a Friday. You're at the end of the week, you've been feeling good, and all you need is to finish the day green to, maintain that good feeling. So one of the things that's been helpful for me in terms of kind of coping with those losses is to actually look very closely to sort of, once I've said I'm done trading, do a little analysis on the trade. Where did things go wrong for me today? When was it? What specific trade was it? What happened? And sometimes I'll be able to identify a very specific catalyst, like I went from green on the day to red. That's a very common one for me. Or I went from having my daily goal to losing like 75% of it. Something like that. Sometimes I just start the day red and then just go deeper and deeper in the red. It may not be as obvious, but more often I went from green to red. And so then I try to set in place, what could I have done to stop it sooner? Mm-hmm. And usually I'm able to walk away with some type of game plan of what I'll do to help prevent this from happening again, like on Monday. Maybe I'll trade a smaller size. Maybe I'll make sure if I do give back half my profit, I'll stop right there. And on other times, I've had to go back and really look at the last month of trading and ask myself what I'm doing right in general, what I'm doing wrong in general. Like, why did I take that particular trade today? How do those trades perform generally? And sometimes within all of that, usually there'll be some takeaways of, okay, this is what I need to focus more on. This is what I need to kind of be careful about. These are some of my emotional triggers. And so for me, anytime I have something like that happen, if I'm able to walk away from that with a little bit of a game plan, that's the beginning of kind of recharging, rebuilding confidence. This is how I'm going to tackle the market tomorrow. I got beaten up, I got knocked off the horse, but I'll be back, and when I come back, I'm going to do these things a little bit better. Mm-hmm. So you'll have to kind of answer those questions for yourself of, is there something in there that you can take as a lesson from the loss? And then you've literally turned a loss into something valuable.
And that's one thing that I would say, Ross, in all the years that you and I have worked together, that kind of analysis, that willingness to really look, and whether that's like looking at the statistics of certain strategies, or even, what time of day, or even, the red day recaps. It's like over and over again, your ability to go, okay, I really want to look at this and learn from it, to treat, as Diane was saying, I want to treat all of this as data. what just happened? What could I have done differently? And like you said, using that to fuel going into, what's my game plan? And then in the midst of that, forgiving yourself.
Yeah.
This is incredible. This is a difficult process. This is not easy to learn. And everyone's going to make mistakes.
Honesty and empathy.
Honesty and empathy. Yeah. There you go.
And I would usually get some solace in the fact that I'm still the same trader that had that green streak of the last month up until today.
Mm-hmm.
So if I could do that again for the next month, I'll be good. And a big part of beginning to turn the corner is having 2 steps forward and then 2 steps back.
Mm-hmm.
2 steps forward, 2 steps back. But you're not losing much ground. And then you start making 3 steps forward and only 2 steps back. And what happens is those big red days, instead of being once a week, they become once every other week. Maybe they're once every 3 weeks, once every 6 weeks, once every 8 weeks. They will still happen. They still happen to me. But they become spread out more and more. And the confidence you get by knowing you can recover these losses, because you are a good trader, you are a profitable trader. You just have to, of course, minimize these red days and try to respond when you see those red flags come up. That all is part of the confidence that allows you to really start to grow.
Right.
The reminders are here for the long run, right? As Danny was saying before, the long mentality. It's really going to shift your own perspective, even going through the weekend, right? How many more weekends you will have as a trader? Like possibly hundreds of thousands in front of you. So one weekend is never gonna make the difference. When you think about how much you're learning and how much your learning curve will inevitably going to bring you much better results with such less amount of effort in the future. So you always need to be thinking forward, I guess. When you're on the path, you're learning something that is difficult to learn, but definitely the skills you're building up today are going to serve you a lot. It doesn't matter how you performed really today or even this week or this Friday when you think about that.
Yeah.
Awesome. I really appreciate your help. And one quick side note, Ross, what you did today was absolutely awesome. I really am proud to be part of this culture and part of this family. And
Thank you.
this really has changed my life in such a great way.
Awesome.
So I just want to say thank you.
You're welcome. Yeah. Thank
I'm
you.
glad I could say that almost to your face.
Yeah.
Probably.
Yeah.
All right, I don't want to take up any more of your time, but I really appreciate you guys helping me out through this.
All right. Thanks so much, Greg. I'm going to let the next
Take care,
person
guys.
in. Yi?
Yep.
All right, here comes Yi on with us. Yi, can you hear us? Almost.
So while Yi is connecting, I have a question that for Ross's answer on that last one. What if somebody is having 2 steps forward and 5 steps back in terms of they're not just going back and losing, like building up and building up little by little and then having a loss that sets them back 2 or 3 months? Anybody can answer.
Anybody can answer that one.
I would repeat my own answer, like the long run mentality, because it's like when you cannot kind of count on your own past performance because you're new, right? You're building up. You are, I guess, the first stage of survival, and then, of course, when you can prove that you can build up some numbers at that point, then you can remember you are that trader. Then kind of went through the green streak, and at that point, yes. But until that point, I guess what saved me in the past was like, what? I'm gonna be a day trader 10 years from today, and no matter what. I just know I want to stick to this. I want to learn about this. I know there's no way I can be any worse than this. I was like, at some point in my career, I was like, I'm learning so much that there's no possible way to be even worse than that. And so I knew, or kind of like convinced myself that I was going to be on this for the long run. Right. So that's what helped me. But maybe, Danny and Selena, or Mike, anybody else could add more.
I think I kind of resonate with that. I thought, I mean, obviously when I was getting started, I had a 6-month drawdown. I didn't start in the sim. I just started live on TD Ameritrade with free commissions, and so it was a 6-month period of learning and being read before I finally broke even. And coming into this year, February was my best month yet. By far, March outpaced that by 150%. April, I gave back pretty much all that I had made in March, and I had to completely readjust my mentality. I mean, I've had some profitability, so I was able to fall back on that fact. But you just have to, I think, have a small green day, lock it up, see if you can have another small green day the next day. I'm still recovering from that loss in April, but I feel confident that I'm on the right track and going to recoup it hopefully soon. I'm on the right track for that. But it can definitely be hard. And I think maybe also important is make sure that your strategy is in place, that maybe you're not making mistakes in that area. If you're good on the strategy, if you're good on the technicals and all of that, it's probably more just to do with figuring out the emotional side of it and maybe getting away from those losses a bit.
Yeah, really good advice. It's trading for the trader you will be tomorrow.
Yeah. Keep your account alive.
Yeah.
Right. Hey, Alex.
That's important.
Good to have you with us.
Hey, everybody. Can you hear me?
Yep.
Yeah.
Perfect.
Hey, Alex.
All right. Well, thanks. It's great to finally meet all you guys. But my question was more on meditation. So a while ago, I had a question about fear of meditation. I spoke with Diane a little bit about this on a one-on-one basis. I think that I've almost got it down to almost a self-bully kind of situation. So I don't know if you guys have had trouble with meditation in the past. Like I said, I think mine boils down to, as I'm trying to meditate, trying to get in a zone, I almost have my past self who was taught that meditation was a silly game that some people played. And I want to hide my meditation from even my wife, even knowing that she meditates. But I just have a weird feeling trying to get into it. Over the past month, I've definitely gotten better, but I wonder if any of you guys have struggled with this kind of mentality and meditation.
Right, for sure. I guess I'll speak to that. So one of the things that we often talk about is that, in that place of meditation, we've shared quotes about this as well. Of, it's not about trying to achieve, some state of perfection. It's actually about meeting everything that's arising. And so making room for whatever that is inside of you and meeting that with some kindness and gentleness, acceptance and compassion. And that can become a gateway of really, having a deeper relationship with yourself. That whatever that part of you is that carries that fear and that discomfort, that's a vital, important part of you that deserves some attention.
And being able to come on this mentor session and name this, right? That's bravery, and that's awesome.
Right.
Yeah, I figured, I'm probably not the only one with this issue, and, it could help other people get through it, which that was the aha moment for me, hearing somebody else speak about their issues with meditation. And he was telling a story. He was in the Redwoods meditating in a group meditation, and the whole time he had a hard time getting into it because his past self was sitting there mocking him for doing it. So he told himself, I don't hate that past self. I love that past self because that shows me how far I've come as a person.
I like that.
And that definitely was more aha. Now, I'm sorry to take up a lot of time, but another question I had for the traders I noticed you guys all have your own different strategies. When learning strategies, I started with Ross. I went, okay, this strategy is awesome. Study it as hard as I can, get into it. My psychology took over, and I had huge wins and huge losses. So first thing I did was, this strategy is garbage. I'm going to Mike. Now, looking back, I definitely wasn't paying as attention as I should have during the psychology portions of this training. So when Ross says, listen to every part of the training, take that to heart. So when I went to Mike, of initially doing great with the strategy, learning his strategy, fell into the same kind of area. And I'm like, okay, I'm going to go find my own strategy. But using all the information that I've gained from everyone. And I see Selena has hers, Roberto has his, Daniel has his. How important do you think it is to find a strategy that also matches your personality?
I think it's vital.
It's everything.
Yeah.
It's simply everything. It's not.
It's
It's
super
not.
important.
It's really not a coincidence if you're speaking to here with that 5 different educators, mentors, call it the way you want, successful traders, and there is none of us that really are doing the same exact thing when it comes to our own approaches. Here you have 5 different approaches, and so Alex, it's definitely through the tools that you learn from us and from this community and from other traders that you discover more of what is the best fit for yourself. That's the key. That's absolutely everything.
I think that you will find that, obviously there's a lot of traders in the small cap room that trade very similarly to me. I think if Jess was on this call, we would probably say, okay, Ross and Jess trade very similarly. Danny trades pretty similarly as well. Mike and Roberto are pretty similar, and Selena kind of goes between large caps and small caps. So she could do a little bit of both. John L10, he does a little bit of both as well. But I think that it's important, even though it's important that eventually your strategy will sort of have its own flair. You'll have your own style, your own preference. I think it's also important that doesn't mean you should try to reinvent the wheel. Just because at the end what you have is going to be unique to you doesn't mean you shouldn't start by looking at what's actually working well for a lot of other people, because that's valuable. And if you find a lot of people are saying, well, momentum is working really well for me, generally speaking, buying dips or bull flags or micro pullbacks, then that may become a component to your strategy. The flair that you might add on it, or the sort of what makes it unique, is you'll learn your risk tolerance. You'll say, I like trading this, but I'm not going to trade Newegg. I'm not going to trade GameStop. I'm not going to trade stocks over 20. The spreads, everything else makes it too hard. I'm going to focus on, that strategy, that setup, but I'm really going to hone in on stocks under 10. Something like that, where you sort of have your variation. So that's my opinion. I think that, yes, we all have a flair, but we fall into fairly, with small cap or large cap or momentum or short selling reversals, there's a lot of commonality.
There's a lot of common. And if you guys want to just go ahead and kill your account and lengthen your learning curve, just go ahead and start switching around. Do a little Ross, do a little, do a little Mike, do a little each of us. It's not helpful. What is helpful is to stick to it. You're going to pick up something from from the strategy, but if you came for Ross, stick to Ross's strategy. Because one of the frustrating things that I see is people going, oh, I can't do this. But you're not even through the classes. Mm-hmm. You didn't go through the classes start to finish. You're not even practicing his strategy. You just think you can't do it because you had a couple of bad days. Now you want to switch. I'm going to run over here and go to Mike's, I'm going to do large caps. It looks a little more doable. You do pieces and parts of that education, and then you're frustrated because, you've been here a year. You're still going to renew, but hey, you don't really have a strategy yet. Mm-hmm. But it's because you won't just stick to it. Stick to something. Respect the education. Ross's the coursework here is incredible. It's very, very complete. And I see I saw questions today. where people are asking questions that there's an entire class on that question. So if you can't get through, and we can't immediately get through all of the education at once, at least read the titles to each of it, at least give it a chance, dig in it. I mean, we do all have something unique that suits our personality best. But one thing I think that each of us did was give the whole education a chance at some point. And it took me a minute. I had to realize that I had jumped around and I'm trying to grab at this and that to come up with a strategy. That's not it. You're not even spending your money wisely if you don't go through an entire course before switching to the next one. You're gonna learn something. Go all the way through Ross's course, then switch to Mike. Go all the way through the large cap course. Come over here and find some mentor session titles that attract you and learn from that. But the jumping around is super inefficient to your success.
And that's a really tough one, because on the surface, like when I got started, I did a little bit of everything, and a lot of people will, because you kind of do have to figure out what feels natural. Is it options? Is it swing trading? Is it penny stocks? Is it this, that? But at a certain point, and maybe it's after you've done a little bit of testing, hopefully in a simulator, and you've kind of just gotten a feel for different educators, because some of it also is like, you know, you might not feel like you can learn well from me for whatever reason. I'm too long-winded, or I don't articulate in a way that you understand, whatever it happens to be. You might learn better from someone else. And so connecting with the person that you're learning from is important, because you want to be able to enjoy going through the classes and everything else. So finding kind of what's kind of sparking your interest and your excitement, and then focusing on that and trying to leave the other things to the side. You may get to a point where you say, okay, I've kind of pursued this as far as I can. I'm not where I want to be. I think it makes sense to shelf this one and now focus more on this. That's not uncommon, that's okay. But trying to do everything at once is not efficient. You want to try to be a specialist. Get good at one thing. Get really good at one thing, whatever that might be.
My story, in a sentence, I came from Ross. I came for Ross. I stayed for Mike. Then I fell for Selena. It's a different story. and then in the process, I found myself. That's how it worked.
Roberto, you should write a book.
Yes.
I will, maybe at some point.
Yes.
Well, guys, I really appreciate it. I'm not going to take up any more time, but just piggybacking off of what Ross said, for anyone listening, he loves to say, spend time in the simulator. Do it in a simulator. That is so correct. My first day trading, it was not in a simulator. It was with real money. I made $10,000. So right there, I walked away saying, I know everything that I ever need to know. That turned into a negative $20,000 month. And then 6 months in a simulator situation. I'm back live now, and it's been nothing but green so far.
That's great.
But definitely listen, stay in the simulator, test that strategy out until you know it works. But thanks again so much, guys. I really appreciate it.
You're welcome.
Thanks so much for coming on, Alex.
Thanks, Alex.
All right, I think we're going to have time. Let's bring Ray on. There's Ray.
What's up, Ray? Look at that beard. He's put some time into that.
Let's see his
Can't
audio.
hear us yet.
There's audio. Hey, Ray.
Ray.
Hey guys, how you doing?
Welcome.
Good, how are you?
Good, thanks for having me.
So yeah, what question do you have for all of us, or for one of us specifically? It's up to you.
So so a little bit of my story and why I'm here. I've been following Ross and the wire trading through YouTube for 4 years now, and I jump into the pool kind of like not knowing how to swim, so to speak. And I also have a very demanding 9-to-5 W2 job, and slowly I started getting profitable. I was doing very long, not long position, but I was holding positions for a long time, very small size, and it hit 2020, and I went working from home, and I was able to put more time on it while doing my other stuff. And 2020 being 2020, it got my account grew 250%, something like that. and I got complacent, and I found a strategy that will work for my time schedule and the things that I was able to do while doing the other job. And essentially, I got very comfortable, profitable. My numbers were very high in terms of accuracy and the way I was trading. And I was trading large caps with very large, sizable shares. And comes 2021, I make a great Q1 on target to make probably more than I had made in 2020. And then something happened that I had a big loss on a short. And from that point forward, I couldn't put my feet on the ground. It's been one after the other, and one after the other, one after the other. The psychology of it is I know what I'm doing wrong, but somehow I come in every single day and I do it wrong again. And I just can't get out of that, bad momentum, for lack of a better term. And I know the market changed because I can notice it when I'm getting on these shorts too quickly or not really following the patterns that I know are profitable for me and the time frames that I know have been proven to give me profits, and just holding and staring like a deer in the headlights of the number getting red and larger until I just can't give up. And also because of the cushion that I had such a rather large account, I'm always adding to average down or average up, and the thing just wouldn't go my way. And that's the situation I'm in right now. It's like I think I was humble enough to say I need to go back to basics, join the Word Trading program, even though I've made so much money in this 4 years, but nonetheless, I need to relearn the strategy and see, be with people that are like-minded and in a community like this that can help me get out of this situation. Right. And I come in, so I reduced my account size by a fifth. So now I'm not even having that much money. And today I traded and I made the same amount of money that I would have made with 5 times the money. However, I didn't average down. I waited for the right entry point. So I was really, having less money in my account forced me to actually look at the patterns and not really jump in like free fall. Oh, if it goes down, I can add more. But then that would be a vicious cycle. And so any advice for me, like what I'm doing right now is really, again, going through the training as much as I can, and then trading small, waiting for the patterns, and
I'm curious.
Hopefully, go back to green.
For the rest of you guys, how many of y'all have been there?
That was in various ways.
Yeah.
I mean, in various ways of a big loss. Yeah.
And
just one bad day after the next, and then coming into the next day saying I wasn't going to do the same thing, and then just doing it again. And
when you're on your 5th red day in a row, you're kind of like, well, who cares? I mean,
it was 6 for me. Yeah.
It's
I was like my breaking point was everything I made in 2021, and I actually made it. It was like a mental target, and I actually hit it. So I'm stopping here, going back to zero. I need to start all over again.
Mm-hmm.
You're lucky for that. There's a lot of people that aren't in that fortunate situation. There's people that have that realization after they've lost hundreds of thousands of dollars. They're down 200,000 on the year, and they're like, okay, I guess I have to stop here. You actually got some profit, which puts you in a very fortunate situation. You've also got your 9 to 5, so there's no rush. This is not a sprint. Mm-hmm. You may have had some good fortune. The wind was at your back a little bit in 2020 because it seemed like it was for a lot of traders. It was for me. That was a market condition that just was advantageous to momentum trading. But so I'm curious, how long has the period been between when you kind of had this big loss and today? Has it been like a month or like 2 months?
It's been actually 2 months. So what happened was I made over 120 grand in the Q1.
Okay.
And what happened was I switched to an LLC to be able to to trade better, and then the watch sale and all that stuff. So, and then at that point, the market shifts, and I started playing, because it worked on 2020. I started playing some shorts that then became pretty large and sizable losses. But then I kept on trading the same single strategy, because I'm like, this cannot keep on going higher, and it did. And it was a vicious cycle to the point where I almost erased everything I made on the year. Mm-hmm. And that was my breaking point. I'm like, if I hit this, I'm currently losing 108. Okay. So, right? Yeah. So I've literally given back everything that I made.
Yeah.
And
that's
it frustrates me. That was my salary 4 years ago, actually. I was making a living on just that. And it just hurts me, because it's really mentally challenging, at least for me.
Well, I think that the forgiveness and the willingness to truly reset, and especially because part of what you were saying, it sounds like there's even the need for an adjustment in strategy, like something that was really working well isn't working as well anymore. And that's, one of the things in working with so many traders, and we were talking about this earlier, of being around enough to see these changes, in the nature of the market, whether it's going from a hot market to a cold market to volatile, whatever, and being able to adjust. Okay, what do I actually need to do differently in order to make this work? And I've seen, certainly, even I'm looking at people right now that I've seen go through that process of that willingness to go, okay, what does not work, what actually works, and that willingness to really look at it in a way that you're being kind and forgiving and compassionate. It's incredible that you had found the success that you had, and you're going to find it again. But that piece of recognizing when you're just taking. There was something that Danny had said about like 6 days in, or it was either Danny or Ross, and it's like, and now I just don't care. You can get into this place psychologically and emotionally where you're just like, okay, bring it on. How much more can I hurt myself? Yeah.
That's when you really have to clear this, and it sounds like you have, but that just, all right, I'm just going to punch this. I'm in now with 10,000 shares. Here we go again. I'm already red by $3,000. I'm going to add more. And then it's because you start to get a little, a little kind of like, I don't know what it is, like conditioned to just being so deep in the red every day that why even bother trading small size when you were down like $20,000 yesterday? So you just immediately go in with huge size, and it's like, how many red days in a row can I have? You find out you can have 6, 7, 8, 10, and you could lose everything in those 10 days. So I think that a forgiveness is important. An acknowledgement of, okay, I took a big step back. That's part of trading. I'm still net positive on my career as a trader. That's good. I've got the cup half full there. I'm the same trader who did this in 2020. I can do that again if I get focused. But to get back to that place of confidence, that's the big part right now, is rebuilding that confidence and kind of retraining your eye to be more disciplined on your entries, your exits, to take good quality setups and to be a little faster maybe, and not to get into that averaging down and holding and hoping. And so one of the things that I've said is like, I just need to get green today. I just need to clear the slate. Like one trade, get green, I'm done. So kind of back to small account, get green, done. And after 5-10 days of that, all of a sudden you start to feel like you know what you're doing again. Mm-hmm. You start to feel that confidence. Okay, so you have a day where you come in, you get red, $1,800, whatever, fine. You'll be, that's a small red day relative to what you had, and then back to green days. That's part of turning the corner, and then from there it's beginning to size back up. And what you're dealing with right now is sort of like the first big drawdown after you started to turn the corner. And the first big drawdown is the scariest because you start to question, was all of that just beginner's luck? You know, was it just a fluke? Can I actually depend on this now as income? And it's not until you get through this first hurdle, and it may not mean you make it all back, but let's say over the next 6 weeks, you have a relatively good 6 weeks and you make money. And then you have a big loss, you know, on week 7. You're going to say, well, wait a second. The last 6 weeks were solid. If I could just go back and do that again, you know, 12 weeks, 18 weeks from now, I'm going to be in really good shape. And then sometimes rebuilding, it might take a year to rebuild to the 125,000. But if you're able to do that, you've gotten through that first really big obstacle the market has thrown at you, and you're going to be stronger as a result of it.
Right.
Yeah, I'll second that. That's just from doing this a long time. It's as simple as that. Just get green. You know, if it's $100, $500, just get yourself green. That's really what I found to kind of help you out of that situation, or that those drawdown situations, is just come in and get yourself green. That's really as simple as it gets.
I think one of the patterns I've identified, if this is good for anybody out there, I would be green. Like, I would get green, but it was a couple $100 and I was not satisfied with it. I'll turn my eye to something else, and all of a sudden, risk management was not there. I was not following my risk management rules and allowing the thing to drop or to keep on going higher if I'm short. And then for not taking that profit at that point, even though such a volatile market, then I'm now in this situation where I need to assume the loss or keep adding to it to average down. And it just hurts because it's really not driving you to follow.
Ray, that's an
now I'm in
incredibly
this situation, yeah.
that's an incredibly important point, and because what you just described was, you know, an example of when, you know, we stop trading what's right in front of us and we start trading. It's like you're trading against that loss, and so within a particular trade, it's like I have so much to make up, and you know that tendency of, you know, you can be in a really good trade, but you're trying to squeeze too much out of it, you know, trying to answer for those previous losses. And again, that's like coming back to, okay, get present, get grounded, you know, taking care of yourself moment to moment.
It's shifting away from trying to make up for that loss, right? Because, you know, it's like if you have to make back $100,000 in a trade, right, or in a day or in a week, or, you know, I mean, the thing that happens to us when we do have a certain dollar amount, a big dollar amount, is that it shifts our, you know, kind of resets what we're looking at, and all of a sudden, you know, this lesser dollar amount doesn't really mean anything, and it's just like a psychological thing that happens. But if you can shift your focus to, I'm rebuilding myself, I'm getting my footing as a trader again.
Step, yeah.
I'm this time right now is my reset. It's my coming back, and I need to think about how I can support myself in that. And Ross and Mike just gave you great ways of supporting yourself by thinking about, you know, getting green, and letting that be your focus, and that'll build from there.
So Ray, I hear you about seeing a small amount of gain on the trade and going, this isn't enough, you know, and so you're not interested in taking that, you know, that couple $100 off when you're looking at thousands. Are you trading with a plan with a profit target? So even if you're if you're at your profit target or your stop, because I also hear you about, you know, you see profit on the table and it goes all the way against you now. But if you're trading with a plan, then you're getting your money at the target or at specific levels for the stock, you know, what is assumed to be the appropriate target. And so that might only be a few $100 when you really want thousands that day, but you're at least, you know, following that rule. So the more times that you have your plan, you take your profit into certain levels or profit targets, even if it's, you know, you already know it's only going to be a few $100, you know, because you've done the math on where is the right technical place to take your profit. And I also started trading with, you know, large amounts of money, and so it was easier to, you know, just press the buttons and and let things happen until it got into a loss. But when you begin to learn, which is what you came here to do, to this community, when you begin to learn to play it strictly on technicals and not on just having enough money to be able to use in this way, then, you know, if it's a few $100, you kind of knew that because that was your profit target anyway, right? So you just go ahead and take that or start paying more attention to those levels. Did that help?
Yeah, so I guess I do follow a strategy. I think the problem for me was it's not the amount of dollars that I wouldn't be willing to take a couple $100. I am. It's just that I was not disciplined enough to put my stop losses, or whether it's a stop loss that I put up as an order or a mental stop loss, and I would allow it to go against me. And just because I was getting stubborn and thinking of the losses and trying to recoup those, I was basically revenge trading, like you guys call it. And I was just keep adding to it and to the position. And I had such a strong conviction that there was money to be made on that trade. And I think what I've learned also is that I got into it too early, because I then realized a couple days later, and I'm like, and then that thought keeps resounding on my head, like, I was in too early, but now I'll do it again. And then I was early again. I didn't follow my stop losses. Right. And then it keeps, it kept building into a point where now it's been several large losses where I'm, back to square one.
You've built a habit on it. So I'm sorry, Ted, do you want to get into?
Well, we need to cut. We need to wrap up. So I just want to say I'm so appreciative for all of y'all coming on with us, and for all the students, and for Ray, thank you for coming on with your questions, and everyone else that came on. This has been really, such an enjoyable session for me, at least. So, thank y'all so much for spending the time with us. I hope that this has been helpful. We're going to be back again, or I'll be back again on Monday for Mindful Monday, and we'll be back for another FOMO Friday next week. Once again, just love this community, guys. So
even if we stop here, Ray, will you please stay on the call, because I'd like to finish. I think that what you're doing is you've created a pattern of loss and an expectation, a subconscious expectation of loss. So at this point, you almost like a professional athlete would do, you need to mentally start practicing, even mentally on the ceiling, what it looks like to win. You need to journal as if you're winning in an I am